Customs agents are seizing luggage at unprecedented rates in 2026. Over 47,000 travelers have faced fines exceeding $5,000 in the first quarter alone. We're talking about ordinary people making simple declaration mistakes that turn dream vacations into financial nightmares. Some are losing luxury purchases worth tens of thousands of dollars. Others are facing criminal charges for errors they didn't even know they were making. The most shocking part? Most of these costly mistakes are completely avoidable. Let's break down the declaration mistakes that are costing travelers thousands. Mistake 9. Not declaring agricultural products. Agricultural products are the #1 cause of customs seizures in 2026, accounting for 23% of all confiscations. You bring back coffee beans from Colombia, dried spices from Morocco, or fruit from the Caribbean as gifts. Seems innocent, right? The fine structure is brutal. First offense starts at $300 for items under $100 in value, but it scales rapidly. A traveler from Vietnam with $40 worth of undeclared dried fruits faced a $1,300 fine in March 2026. Another passenger from Mexico with undeclared chorizo, valued at $25, paid $800 in penalties. Here's what travelers don't understand. The value is irrelevant. Customs doesn't care if your mangoes cost $5. What matters is the potential for introducing pests, diseases, or invasive species that could devastate American agriculture worth billions. Real case. A family returning from Italy in January 2026 failed to declare a suitcase containing salami, prosciutto, and cheese totaling $180 in value. Total penalties: $4,200, plus the items were destroyed. They had no idea cured meats required declaration. The solution is simple. On your customs form, check Yes for agricultural products and list them. Customs will inspect and determine if they're admissible. If not, they'll confiscate them with no penalty because you declared honestly. It's the failure to declare that triggers massive fines. Mistake 8. Misunderstanding the $800 exemption. The U.S. allows returning citizens an $800 duty-free exemption on goods purchased abroad. Sounds straightforward. But misunderstanding the rules costs travelers an average of $2,400 in unexpected duties and penalties. First, the $800 exemption applies only if you've been outside the US for at least 48 hours. Same-day trips to Canada or Mexico get zero exemption. Second, it's per person, not per family. You cannot pool exemptions. Third, alcohol is limited to 1 liter per person over 21 regardless of value. Here's where travelers get destroyed: exceeding the exemption without declaring it. A traveler from Paris with $2,400 in designer purchases declared only $800, hoping to avoid duties on the remaining $1,600. Customs found receipts for $2,400 and assessed not just the unpaid duties of $160, but a penalty of $3,200, double the undeclared amount, for fraud. The duty rates are actually reasonable at 0 to 10% on amounts exceeding the exemption, but penalties for intentionally concealing purchases are 25 to 40% of the item's value, with repeat offenders facing criminal prosecution. Real case from February 2026. A traveler bought a Rolex in Switzerland for $18,000. They wore it through customs without declaring it, claiming it was their personal watch from home. Customs noticed a fresh Swiss retailer's sticker on the clasp. They searched the traveler's phone, found the purchase receipt and email, and assessed an $8,200 penalty plus $1,800 in unpaid duties. Total hit: $10,000 for trying to save $1,800. Mistake 7. Bringing back counterfeit goods. Over 18,000 travelers have had luxury bargains seized in the first quarter, with combined penalties exceeding $41 million. Here's the reality. Buying counterfeit goods abroad is illegal, and bringing them into the US is a federal offense. Customs doesn't care that you bought a fake Gucci bag in Bangkok for $40. They assess penalties based on the retail value of the authentic item, which could be $2,400. First-time offenders face civil penalties equal to the manufacturer's suggested retail price of the authentic item. That $40 fake Rolex with a genuine retail value of $15,000 triggers a $15,000 penalty. The counterfeit is seized and destroyed, and you pay the full penalty. Repeat offenders face criminal prosecution with fines up to $2 million and up to 10 years in prison. Trafficking counterfeit goods is a felony. Real case from April 2026. A traveler returned from Turkey with 4 counterfeit designer handbags purchased for $320 total. Customs identified them as counterfeits with combined authentic retail values of $11,200. The traveler faced an $11,200 penalty, paid a negotiated settlement of $6,700, and lost all 4 bags. The bargains cost her $7,020 total for nothing. Some travelers argue they didn't know items were counterfeit. Customs doesn't accept ignorance as a defense. If you paid $50 for a Chanel bag that retails for $5,000, you knew or should have known it was counterfeit. Mistake 6. Not declaring currency over $10,000. U.S. law requires declaring currency or monetary instruments exceeding $10,000 when entering or leaving the country. Failure to declare triggers automatic seizure and penalties up to $500,000. The $10,000 threshold is cumulative per family or travel group, not per person. A family of 4 carrying $3,000 each, $12,000 total, must file a declaration. Here's the critical mistake. Travelers think splitting currency avoids the requirement. A traveler with $15,000 cash keeps $10,000 in carry-on and gives $5,000 to their spouse. Both fail to declare. Customs finds the money and seizes all $15,000 for structuring, deliberately splitting currency to evade reporting. That's a federal crime with penalties up to 5 years in prison. Real case from January 2026. A traveler returning from a Mexico property sale carried $43,000 in cash undeclared. Customs randomly searched his bag, found the money, and seized all $43,000 pending investigation. To recover it, he had to prove the source was legitimate, which took 9 months and cost $8,200 in legal fees. He eventually recovered $38,000. They kept $5,000 as penalty. Had he simply declared it initially, he'd have walked through with all $43,000 in 15 minutes. The declaration process is straightforward. You file FinCEN Form 105 during customs processing. There's no limit on how much you can bring. You just must declare amounts over $10,000. The form takes 3 minutes. Do you think these penalties are fair? Comment below because this next mistake is even more common. Mistake 5. Buying prescription medications abroad. Bringing prescription medications from abroad is legal under specific conditions, but violations cost travelers thousands in fines and can result in criminal drug importation charges. The rules are strict. You can bring up to a 90-day personal supply of FDA-approved medications with a valid U.S. prescription. The medication must be in original packaging with pharmacy labels. You must declare it on your customs form. Here's where travelers face disaster. Buying medications without U.S. prescriptions. Mexico and Canada sell many prescription drugs over the counter that require prescriptions in the U.S. Real case from March 2026. A traveler bought $850 worth of prescription medications in India. Antibiotics, pain relievers, and diabetes medication, all legal over the counter there. She brought back a 6-month supply to save money. Customs found the medications during screening. She had no U.S. prescriptions. All medications were seized. She faced a $4,100 civil penalty for importing controlled substances and spent $3,400 in legal fees negotiating it down to $2,800. Total cost: $3,650 plus losing $850 in medications. Another violation: buying medications for family members. You cannot bring back someone else's medications even with their prescription. Each traveler can only bring their own prescribed medications. Mistake 4. Not declaring business equipment. Business travelers bringing equipment, samples, or demonstration materials face complex customs rules. Violations result in duties, penalties, and equipment seizures that can cost $10,000 or more. The rule is simple. All commercial goods must be declared, even if they're returning to the U.S. after being taken abroad temporarily. Travelers must use ATA carnets or temporary importation bonds for equipment valued over $2,500. Here's the common mistake. Business travelers assume their laptop, camera equipment, or product samples are personal items exempt from declaration. They're not. If you're using them for business purposes abroad, they require commercial declaration. Real case from February 2026. A tech consultant traveled to Brazil with $32,000 worth of servers and networking equipment to install at a client site. The equipment was temporary. He planned to bring it back. He didn't file an ATA carnet or temporary importation bond. Return. Customs assessed full duties as if he'd purchased the equipment in Brazil. $5,800 in duties plus a $9,600 penalty for commercial importation violations. Total hit, $15,400 for missing paperwork. The ATA carnet costs $250 to $500 depending on equipment value and eliminates all these issues. It's an international customs document that allows temporary importation of commercial goods duty-free. Mistake 3. Jewelry and luxury watches. Jewelry and luxury watches are the third highest source of customs penalties in 2026, with average fines of $6,800 per violation. The issue is travelers wearing newly purchased items through customs, claiming they're personal possessions from home. You buy a Rolex in Switzerland for $22,000, a Cartier bracelet for $8,400, or an engagement ring for $15,000. You wear it through customs to avoid declaring the purchase. Customs agents are trained to spot this. They look for items with fresh jeweler's marks, new-looking clasps, watches with protective stickers, partially attached, or jewelry with no wear patterns. They also check tan lines. If you have a tan line from your old watch but you're wearing a brand new Rolex, that's a red flag. The penalties are severe. For luxury items, customs assesses penalties of 40% of retail value for first offenses. That $22,000 Rolex triggers an $8,800 penalty plus $2,200 in unpaid duties, total hit of $11,000. How do they catch you? Customs has access to credit card transaction data if they suspect violations. They can search your phone and find purchase confirmations, receipts in email, or photos of you trying on items in stores abroad. They monitor social media. Travelers posting shopping hauls create evidence for customs violations. Real case from April 2026. A couple bought matching Rolex watches in Dubai for $38,000 total. They wore them through customs at JFK, claiming they were gifts from years ago. The watches looked brand new with no wear. Customs questioned them, searched their phones, and found WhatsApp messages discussing the purchase plus the receipt in email. Total penalties, $15,200 plus $3,800 in unpaid duties, $19,000 for trying to avoid declaring $38,000 in purchases. The solution is simple. Declare luxury purchases honestly. Yes, you'll pay duties of 5 to 10% on amounts exceeding your $800 exemption. On a $22,000 watch, you'll pay approximately $2,120 in duties. That's far better than $11,000 in penalties for getting caught lying. Mistake 2. Bringing cultural artifacts. Cultural artifacts and antiquities are among the most severely penalized customs violations. Travelers face not just seizure and fines, but potential federal charges for trafficking in stolen cultural property. Many nations have laws prohibiting export of cultural artifacts, archaeological items, religious objects, and historical items over a certain age. Bringing these into the US without proper export documentation violates both US law and international treaties. The penalty structure is extreme. Base fines start at the appraised value of the item, often 10 to 50 times what you paid, plus penalties of 100% of appraised value. For items from protected sites, criminal charges include fines up to $250,000 and 5 years in prison. Real case from January 2026. A traveler purchased what they believed was decorative pottery in Peru for $180. It was actually a pre-Columbian artifact over 800 years old from a protected archaeological site. U.S. Customs seized it. The artifact was appraised at $24,000 for repatriation purposes. The traveler faced a $24,000 fine plus a $24,000 penalty, $48,000 total. They negotiated it down to $18,000 through legal representation that cost another $7,200. Another case from March 2026. A couple bought ancient Roman coins at a Turkish market for $650. They declared them as souvenirs, valued at $50, not understanding their archaeological significance. Customs identified them as authentic artifacts requiring export permits from Turkey. The coins were seized. The couple faced federal charges for smuggling archaeological resources. After $22,000 in legal fees, they pled guilty to reduced charges and paid a $32,000 fine to avoid prison. Which mistake surprises you most? Comment below, because number 1 is costing travelers six-figure penalties. Mistake 1. Not declaring items shipped separately. The number 1 most costly customs mistake in 2026 is failing to declare items you purchased abroad but shipped separately to your US address. This accounts for 31% of all six-figure customs penalties assessed against individual travelers. Here's the trap. You're in Italy and buy $18,000 in designer furniture, artwork, or high-end leather goods. The seller offers to ship it directly to your US home. You think this avoids customs because you're not physically carrying it. You're dead wrong. All imports to the US pass through customs regardless of shipping method. When the package arrives, customs assesses duties based on declared value on shipping documents. If those documents undervalue the contents, which shady sellers often do to help you avoid duties, you're liable for customs fraud. Many international sellers deliberately undervalue shipments. They mark a $15,000 shipment as $800 leather goods, thinking they're helping you. When customs inspects the package, which happens on 23% of international shipments in 2026, they find the undervaluation, trace it back to you, and assess massive penalties. The penalty structure is brutal. For undervalued shipments, penalties equal 40% of actual value plus unpaid duties. For willful violations where evidence suggests you knowingly participated, penalties reach 80% of actual value. Real case from February 2026. A traveler purchased custom furniture in Vietnam for $32,000. The manufacturer shipped it to California, declaring the value as $2,400 on shipping documents. Customs inspected the shipment, found furniture worth far more, investigated the purchase, and discovered the actual price. They assessed $3,200 in unpaid duties, plus a $25,600 penalty for willful misvaluation, 80% of the $32,000 value. Emails with the manufacturer discussing helping with customs proved knowledge. Total penalty, $28,800 on a $32,000 purchase. Another massive case from March 2026. An art collector purchased 6 paintings in France for $187,000. The gallery shipped them to the US, declaring the value as $14,000 to minimize customs issues. Customs flagged the shipment, inspected it, and brought in art appraisers who valued the paintings at $220,000. They assessed $22,000 in unpaid duties, plus a penalty of $176,000, 80% of appraised value for willful fraud. The collector paid a negotiated $142,000 penalty after proving they weren't fully aware of the scheme, plus $37,000 in legal fees. Total cost, $179,000 in penalties and fees on art worth $187,000. The solution is simple. Always declare purchases you made abroad, even if shipped separately. When you return through customs, list items shipped separately on your declaration form with estimated values. This creates a paper trail showing honest intent. When the shipment arrives and customs assesses duties, you have documentation proving you weren't trying to evade customs. Customs enforcement in 2026 is more sophisticated and aggressive than ever. Agents use AI image recognition, access to financial transaction data, social media monitoring, and behavioral analysis to catch violations. The "I didn't know" defense doesn't work anymore. The 9 mistakes we covered account for over $340 million in penalties assessed against individual travelers in Q1 2026 alone. Average penalties range from $1,300 for agricultural products to $82,000 for cultural artifacts and willfully undervalued shipments. The solution is straightforward. Declare everything honestly. The worst-case scenario for honest declaration is paying duties of 5 to 10% on amounts exceeding your $800 exemption. The worst-case scenario for dishonest declaration is tens of thousands in penalties, criminal charges, and permanent customs red flagging. If you're unsure whether something requires declaration, declare it anyway. Customs agents appreciate honest travelers and work with you. They destroy travelers who lie. Have you ever faced customs issues? Share your story in the comments. If this information saved you from a costly mistake, hit that like button and subscribe for more travel guides that protect your wallet. We post weekly videos on international travel rules, visa requirements, and how to navigate customs in different countries. Hit the notification bell so you never miss an upload. Thanks for watching. And remember, honest travelers are smart travelers. Bien travels.